Now, India's wholesale inflection picked up pace in January, with the wholesale price index rising to 1.81% compared to 0.83% in the previous month. The increase was largely driven by higher prices of manufactured goods. Manufactured product inflation climbed to 2.86%, pushing core WPI inflation sharply higher to 3.2% from 2%. Food inflation rose to 1.41% after remaining flat in the previous month. On the index side, overall commodity prices rose 0.51%, led by 1.30% increase in manufactured products. Overall, January's WPI data points to rising core inflation driven by manufacturing costs, even as food and fuel prices provided some relief, presenting a mixed inflation outlook going forward. And then it was a positive start to the trading week as Nifty closed near 25,700 mark. Mid-caps gained while small caps lagged. Realty, PSU, private banks gained. On the other hand, auto, media stocks came under some pressure. Top Nifty losers include Tech Mahindra and Bajaj Finance. My colleague Snehi Shah is here with more details on this.
Well, yes, overall a pretty good start for a very hectic week, and what started in the red soon became absolutely flat, and then we saw some very healthy gains coming in on the index. We were able to close with an uptick of about 0.8%, and above that 25,680 mark on the Nifty 50 benchmark. On the flip side, for the Sensex too, an 0.8% uptick coming in. It was Nifty Bank that did all the heavy lifting on the street today. Very healthy move coming in over here. 1.25% uptick on the Nifty Bank. The India VIX was absolutely under control as well. The advanced decline ratio, yes, although in favor of the declines very nominally, but in the last 1.5 hour of trade, we also did see a very sharp uptick coming in the Nifty mid-cap index, about 0.5% higher on that index. But other than that, the Nifty small cap continued to be absolutely flat, so no show of support coming in at all from the Nifty small cap index. It was some of the marquee Nifty names like Power Grid was up 4.5%, Coal India, HDFC Bank, very healthy move, a 2.5% uptick on HDFC Bank and a 1.5% uptick on Reliance kept the markets going high. Your Adani Enterprises, Max Health, Axis Bank and Shriram Finance that saw very good gains as well. On the flip side, from the Nifty group of stocks, it was Tech Mahindra, Bajaj Finance, Maruti Suzuki, Tata Motors, PV, Bajaj Auto, Eicher. So largely it was the auto pack of stocks that was in the red. From the broader end of the market, even Steven show coming in, but sectorally it was the day of the energy stocks with names like Power Grid, Adani Enterprises. You had Coal India, JSW Energy, Siemens, IGL, CESC. All of these stocks have seen very stellar gains. This followed by PSU banks, Realty, Nifty Bank, Pharma, FMCG, Nifty Finance as well as Nifty Metal. On the flip side, there was some pressure on indexes like Nifty Auto, the top losing index, along with Nifty Media. You had names like Uno Minda, Hero MotoCorp, TVS Motor, Maruti, Tata Motors, PV that was under immense pressure. From the broad end of the market, of course, the one bunch of stocks that was in focus was the broking names, but all of them, in fact some of them rather, did also see some stellar recovery, while on the other side names like BSE continue to be top laggards. You had names like EIL for a second straight day after earnings, a double-digit gain on that stock. Natco Pharma on the back of that semaglutide injection approval coming in 7% higher. GMR reports strong numbers, good monthly data also coming in. RHI Magnesita, Acom, Signature Global, BLS, Power Grid, JB Chemical, most of them earnings candidates, and very good show on some of these names. On the flip side, immense pressure on Blue Jet Healthcare on the back of a downgrade. Similarly for Ola, Brainbees was in focus, CE Infosystem, TB Tech. You have Inox Wind, Angel One. These are some of the top losers on the street. All in all, it was a good day of trade coming in and a very healthy start to the start of the week. All eyes are going to be on what happens on Tuesday, which is the weekly Nifty expiry day. So expect some volatility, but nonetheless, the start for the week has been rather strong.
Well, Snehi, thank you so much for getting us that data. Now, trade data for the month of January is out. India's trade deficit stands at $34.7 billion, while goods exports stood at $36.5 billion. My colleague Prakash is here with more details on this. Over to you, Prakash.
Well, the government has come out with the details of the trade performance of month of January, and also the duration, also its overall performance in the current financial year, essentially from April to January. The Commerce Secretary has mentioned that the overall exports registered at $720 billion during April to January of the current fiscal year, whereas there has been a 6.5% growth in the first 10 months of the current fiscal year as far as overall exports are concerned. Along with that, when it comes to merchandise exports, which grew by 2.20% during the first 10 months of the current fiscal year, whereas services exports grew by 10.57% to $354 billion during April to Jan in this current fiscal year. Along with that, overall trade deficit increased by 9.4% during this period, whereas the total exports recorded in January stood at $80.4 billion. So these are the broader picture, and the government is expecting, in fact the Commerce Secretary has mentioned that after India-US trade deal and India-EU trade deal, they are expecting some turnaround, and the performance will be improved going forward. Back to you.
Hold it right there, Prakash. We have other set of information to get from you. Now, Commerce Secretary has revealed that the India and US are in the final stages of finalizing the much anticipated trade deal between the two countries. In fact, an Indian delegation is expected to visit US next week. What are you hearing from your sources, Prakash?
No, it's not based on our sources. In fact, the Commerce Secretary has reiterated that the next set of process has been initiated when it comes to India-US trade deal. In fact, both countries are engaging virtually to finalize the legal framework after the joint statement, which have been announced by the both countries a few days back. Now, the next set of process has been initiated to finalize the deal, and the next set of process is converting the joint statement into legal documents, and therefore both countries are engaging. In fact, a team led by Chief Negotiator of India will be visiting the United States next week, and the formal process will be initiated. In fact, the Commerce Secretary has mentioned that it's very difficult to give any sort of a timeline to finalize the deal or sign or make it a legal process in next few months. But efforts are being made. In fact, both countries are engaging actively, and they are expecting that they will be in a position to sign the deal by end of March this year. A very significant development coming in. Process has been initiated. Now the joint statement will be converted into legal document, and the formal deal will be signed by March of this year, which has been mentioned by the Commerce Secretary, and we are expecting that a good development coming in by March this year. So it's a very crucial development coming in as far as India-US trade deal is concerned.
Absolutely, Prakash. Thank you so much for getting us those details. Now, RBI has tightened the funding rules for stockbrokers effective April. Banks will now be allowed to lend only against fully secured exposure, banning unsecured or partially secured structures. At least 50% collateral is mandatory, with 25% in cash, while equity collateral will face a 40% haircut. Ankur Mishra gets us the details. Ankur, take it over.
Yes, even the capital market norms, as I mentioned earlier, for the stockbrokers, that has been tightened, and overall, if you see, the 75% ceiling has been kept, and more importantly, if you see, the overhaul of norms has been done by Reserve Bank of India. Now, for stockbrokers, as I said earlier, the 25% minimum cash should be there. But the LTV has also been revised for capital market exposure, and that is now 75%. Overall, if you see, there is a revision in the norms which has been done by Reserve Bank of India, and whether you talk about M&A financing, whereby now Reserve Bank has mandated that up to 75% lending can be done, and earlier this limit in the draft norm was kept at 50%. Even for the bank limit has been raised, which was just 10% earlier. Now that has been enhanced to 20% in the new norms. So all in all, M&A financing becomes more targeted and easier for the banks.
Absolutely, Ankur. Thank you so much for getting us those details. Now, we spoke to Gautam Duggad, Head of Research Institutional Equities, Motilal Oswal Financial Services, over his top sectoral picks and more. Listen into excerpts from the conversation.
We are overweight, and it's been a preference for us for some time now is automobile, and the auto earnings have been excellent. The monthly numbers after the earnings got over for the month of January, the auto numbers were very strong. So we like that as a sector. We are overweight. We are overweight on PSU Bank, and that call has played out beautifully. We still think that SBI is underpriced for the kind of quality of earnings that it is showing. Our expectations for private bank earnings on the next 2-year basis is close to 20% CAGR. Now, if that comes through, I have fairly strong confidence that even Nifty will be able to deliver around 14% earnings CAGR that we are penciling in right now. Close to 16% for this year, that is FY27, and about 12 to 13% for FY28. We're positive on diversified financials also, which is NBFC and capital market. Capital market is our preferred theme from a 3 to 5 year basis too. Second sector where we are very positive is consumer discretionary. We have zero allocation to consumer staples in our model portfolio, but we are very bullish on consumer discretionary. Names like Titan, Indian Hotels, Radico Khaitan, Indigo is something which we like. And then, selectively, we like capex plays on the defense side, on the EMS side, which is our big overweight call again, and then we are neutral on telecom, cement, pharmaceuticals, and underweight on metals, oil and gas, and consumer staples. In fact, private bank is also marginally underweight for us, and we are also positive, and we currently have an overweight call on IT. They are now reflecting a terminal growth of just 3%, underlying free cash flow implied FCF CAGR of just about 6.5%. And valuations have become quite cheap. Of course, we don't know where the things will settle, so we'll wait for that. But purely on a fundamental basis, purely on valuations, yields, and other ratios, we think IT is now looking quite attractive.
Now, at the India Retail Leadership Summit, my colleague Anjali Palod caught up with Trend's MD, P. Venkatasulu. He says 25% growth remains the long-term ambition, even as business cycles go through peaks and through lows. With younger audience driving future demand, the company says it will apply lessons from the past setbacks to sharpen execution going forward. Listen in.
It's an ambition, an aspiration, as opposed to anything but just concrete for every period. And at the end of the day, if you look at any 5-year period in the history of Trent, it has its peaks and it has its troughs. And I do bet over the next 5-10 years, if you look back at these periods, you would be very much consistent with the kind of aspiration that we hopefully see with the opportunity that the Indian market presents, and hopefully we'll do justice to the growth opportunities that we have in the market.
Right, so but what's really the reason behind the past 2 quarters growth numbers being where they are?
We've obviously put out a whole bunch of commentary as part of our quarterly releases. We do think the consumer sentiment in general has to be gradually improving, and we do bet that the outlook continues to be quite strong in the medium term. So that's the way we think about the market.
One green shoot that we've seen, especially with Westside, was the online revenue front. We've seen a healthy growth on that. So what's the plan to really take that forward? Are you looking at more partnerships with aggregators as well, or will Westside stay within the Tata ecosystem, even online?
Online clearly is going to be within our own ecosystem, and we do think being completely direct to consumer, as we have always been with Westside and Zudio, is possibly the model that works for us. We're completely integrated at the back, and we're completely differentiated from a customer proposition perspective with these brands.
Also, give us a sense of what's happening with burnt toast. What's really the customer proposition there? And it's for the younger audiences. But we see a lot of those audiences going right now to Westside and Zudio as well. So what's new that burnt toast is going to be doing? And what's the plan ahead? How aggressive and in what pockets will you be opening those stores?
We're always excited about everything that we do, Anjali. And we're excited, therefore, about burnt toast too. At the end of the day, it is about addressing younger audiences. The market's getting more stratified, right? At the end of the day, we started with Zudio scaling up when Westside was already a significant brand. And we do think young audiences have a lot to look forward to in Westside, a lot to look forward to in Zudio, and of course, now with a lot to look forward to in Burnt Toast. And as far as plans for Burnt Toast is concerned, I think we will build on the learnings. We'll turn around and figure it out and solve more puzzles as we go forward.
Right, one last question on Zudio, there is talk of the rapid expansion that has happened with Zudio leading to some sort of a cannibalization in stores that are opening, in similar areas. How do you read this impact, and is there going to be any change in the pace of expansion that we've seen for Zudio so far?
We've been very consistent if you look at the number of stores that we've been opening in these markets, and we do think continuing to improve customer experience with newer phase of stores that we are opening.
Well, that was Trend's MD speaking to my colleague Anjali Palod. On that note, it is time for us to slip into a very, very short break. You don't go anywhere. We will be right back on News Now. 55 countries and more than 3,000 speakers. Global tech leaders including Sam Altman of OpenAI, Dario Model of Anthropic, then Sundar Pichai of Google are attending. World leaders including Emmanuel Macron, Luis Inacio Lula da Silva, Pedro Sanchez and Kyriakos Mitsotakis are also present. Now, Prime Minister Narendra Modi will inaugurate the expo as India pushes for global consensus on AI governance and shared digital commons. Now, we caught up with Australian High Commission to India, Philip Green, who has explained how India and Australia can collaborate on AI front. Listen in.
Now, you've spoken about collaboration between Australia and India. How can both the countries make sure that the benefits of AI reach everyone and the fact that AI is inclusive, while India is, of course, focused on making sure of that? But what more needs to be done as far as that particular aspect is concerned?
Well, I mean, that's a big issue for Australia because, we are a large continent and many of our people live in the urban centres, but an important part of our population, including our Indigenous population, lives in rural and remote areas. And we all know that those of us who live in India, know that democratizing AI is a very important objective for this government. So, I mean, in our case, it's about making IT capability available for the widest range of people, including in underserved domains in our rural and regional communities. But in terms of what we can do together, let me just focus on this for a second, because, science and research has been a key part of our partnership for more than 20 years now. We've spent 600 crore rupees, that's just the Australian government, on science and technology partnerships between Australia and India. And just to give you a sense of this, Australia is a country which produces more than the average amount of innovation. I mean, Google Maps was invented in Australia. Wi-Fi was invented in Australia. The bionic ear, the first bionic ear, was invented in Australia. And India is already a great science nation, but has huge possibilities in the future with literally armies of process engineers, scientists, researchers, IT capable people across the board. So, the way in which I think about it, Samita, is this, that Australia has a very high level of innovation, and India has a scale that can take that innovation to much broader domains and indeed globally. And I think that's the complementary partnership between the two of us in science and research.
And Excellency, one final question on how you see India's role emerging in the global AI ecosystem. We've seen, of course, the United States on one side. You have the China aspect and China model on the other side. But where do you think India taking a leadership position as far as AI is concerned?
Well, number one, can I just underline how seriously we're taking this summit? So, we have a delegation of 40 strong. It's led by our Cabinet Secretary, the Honourable Andrew Charlton, the senior member of our government. We have our Ambassador for Cyber and Tech Affairs coming, Jessica Hunter. We're encouraged, we're helping to bring a group of South Pacific senior officials to India so that they can benefit from this. And in addition to that, our Australian Trade Commission is bringing a delegation of scientists and business professionals and universities here. So look, number one, we take this very seriously. Number two, I was last month again in Bangalore and Hyderabad, and gosh, that just underlines to you what a major centre of global IT capability India is. And I'll say it again, there's a huge opportunity between Australia, which is a place which has got a high level of a very high level of innovation, and India, which can scale and globalise. So, look, we're delighted that India is hosting this AI summit. I guess we would have been at any AI summit because it's pretty important for our nation. But the fact that it is happening in one of our very closest partners, and a partner, India, with which we see a huge amount of upside, not least in the area of science and technology, makes this a no-brainer for us, and that's why we're taking it very seriously.
Absolutely. At this moment, we have the visuals of PM, Prime Minister Narendra Modi, coming and taking stock of this mega event that is happening in Bharat Mandapam in the Delhi NCR region, where leaders, tech leaders from across the world have descended upon the capital city, where India is hosting its first global South AI Summit. That's Prime Minister Modi taking a stock of the kind of demos that are there on display, various models when it comes to Bharat Gen, when it comes to AI, when it comes to technology. What all is on display on ground at Bharat Mandapam is what PM is trying to understand. And these visuals are coming in fresh from the Global AI Impact Summit, which is happening in the national capital. As we know, leaders from 45 different countries have descended upon the capital city to speak about the future of AI and the role that India can play when it comes to AI going forward. And that's PM Modi at the stall of Ganani.ai, where he's understanding the potential of AI and what it can do for the businesses, what it can do for the individuals in the country going forward, and the kind of the kind of scope that India has in this space, and how India can expand its AI capabilities going forward. Well, on that note, it is time for us to wrap this edition of News Now. Goodbye from me, Shibani Gharad.